Hello to all traders and welcome to our quarterly engagement for the report into the markets going into 2023. Now we're looking at the first 3 months of the year to see if there's going to be any surprises in store and just take a look at the last quarter to see if anything detrimental happened in the markets that we're looking at today. And today I'm joined by our special guest, Daniel. Daniel, thanks for joining me once again.
Thanks, good to be here.
No problem at all, Daniel. Thanks for joining us once again. And so, just like we usually do, take a look at the basket of the main movers in the market to see where we've come from and where we're going to for the next 3 months, and getting a quarterly feel of where traders are expected the markets to be ending up. So we'll look at the dollar index first of all today, because since we've had a bit of a collapsation, you could say, on the dollar since it peaked just over 114. It's roughly just trading below $104, which we'll look on the chart shortly. But we've had recession fears, the Federal Reserve really playing into the hands of a lot of traders and economists into the direction of the dollar. Where are we looking at in the next few months for not only the Fed, but obviously this recession fears and obviously GDP really starting to take a little bit of a hit as well?
Yeah, it's all quite a lot to go through there,
It is,
and you
yeah.
summarized it quite nicely too. Yeah, well, there's still a big debate going on what exactly is going to happen with the Fed, because the Fed is sort of saying that they want to go above 5% interest rate. It's currently at 4.5,
Mhm.
and the market is saying no, they're not going to get that far. Then it's only going to be somewhere below 5%. And so the
Right.
question is whether the Fed is going to be right about what the Fed is going to do, or the market is. And so the general notion is that there might be some more data coming out that will lead to the Fed not raising as high as expected. Mostly it's a recession. So you have, like, for example, Jamie Dimon is kind of like the more well, he's talking about a economic hurricane, which is a little bit dramatic.
Mhm.
But the some people like to get say something a little bit that that has a little bit more punch than just saying, "Well, there's going to be a recession." That's a little bit boring.
Exactly, yeah.
Yeah.
Add a little bit of spice to it, basically.
Exactly. I should do that too myself, but I'm not exactly the best at it. Yeah, and so then there's a whole other people who are just saying, no, there isn't going to be a recession at all, which mostly of those are people in the Fed. So the kind of idea that a lot of people are thinking is that since the Fed thinks that there isn't going to be a recession, and I think
Mhm.
there is going to be a recession, therefore the Fed is going to be wrong and they're going to have to cut rates, is what a lot of people are thinking. That's not necessarily what I'm thinking, even though I use the first person there. So, the thing is, we probably have to follow the data and see who ends up being right, because so far the inflation rate's been coming down faster than most economists expected.
Yeah.
uh, but also these are the same economists who didn't expect the inflation to go up so much.
Mhm.
So these people are not having all that much trust in economists lately, particularly how they've been, the forecasts have been a little bit off. So since all of them are saying there's going to be a recession coming,
That is true,
and
yeah.
yeah, so well, I guess we'll see.
Well, what direction do you see the Fed going for the next meeting that they're having? I believe it's next month. Do you believe
Yeah,
there's going to be an aggressive rate hike, or will it be a bit eased now? Maybe 25 basis points, 50 basis points, something like that.
yeah, it's kind of the big question, because they keep saying that they want to raise rates really
Hmm.
hard, but then they also have part of their communicate the way that they try to influence the market is through telling people that they're going to raise rates, whether they're actually intending to or not,
Hmm.
because they have this economic theory that what inflation does depends on where people expect inflation to be. So they're trying to
Yeah.
manage expectations more than actually try to tell people where the actual policy is going to be. That's why a lot of people aren't necessarily believing the Fed when they say that they expect rates to go significantly higher. They sort of think that the Fed is just sort of saying that in order to put in the expectations, so that then the market behaves accordingly. And
Hmm.
so I would the majority of the economists are so far going along with 25 basis points, which is where I kind of fall on, because
Yeah, I'm kind of
yeah,
there as well, but we'll
yeah,
see. Yeah.
because you see the inflation rate's been coming down really
Mm,
fast. And
it
so
has.
I don't the Fed really doesn't want to raise rates, because the higher they raise the rates, the less money the Fed has, essentially,
Hmm.
because um, of all the bonds and also of the deposits, the overnight deposits that they have, there's a lot of banks that have excess cash and they're putting it into the Fed, and then the Fed pays interest on that. And so now
Hmm.
the Fed, normally the Fed makes money and then gives that money to the Treasury.
Hmm.
Now the Fed is losing money, which means they have to take it from the treasury, and
Yeah.
also the interest rates are going up, which makes it harder for the treasury. So they have a lot of incentive to not raise interest rates. So as long as there's a good reason for them not to raise interest rates, I would be inclined to toward the lower end of where they think it's going to go.
Yeah, that's true, Daniel. Well, we'll
Mm,
just take a quick look at the chart at the moment because currently we've seen quite a big fall on the US index, which is quite significant because, like I said, when it got up to peaking just above, well, this is a 20-year high at the back end of September. But since then, we've seen quite a dramatic collapse on the dollar, and a lot of economists are now saying that it's going to probably be trading at roughly about the $100 area by the end of the quarter, even beforehand. And this would obviously be, going back to April, so almost yearly lows there.
mm.
So, with that being said, can you see more of a loss on the dollar as we head into the first quarter?
Well, yeah, this the thing is it kind of difference between what the other central banks are doing, which well, I guess we'll talk more about the euro in a little bit.
Hmm.
But the thing is that since the Fed is kind of easing off on raising rates, it's larger. The basket of currencies, the biggest component there is the euro, so that could also put
Yeah,
downward pressure. And that peak and then the turn down coincided when everyone sort of said, okay, this is pretty much as far as the Fed is going to go. Now they're going to have to start turning around, and so they raised once more 75 and then 50, and then everyone said, okay, it's going to reach to more or less around 5, and since then it's been staying there. That's probably
yeah,
why it'll stay lower. Now if the Fed were to come out and say raise by 50 at the next meeting, that's going to put it at 5%, which is actually above what the current market is currently expecting. So that could
mhm,
be kind of a big shock in like 3 weeks from now. And so, then we'll know whether the Fed is actually going to be serious about going above 5%. Because if they do
exactly.
50, it's very unlikely they're going to go 50 and then zero. They'll probably most likely do at least 25, and so then they'll be above 5%. Just and no one would, as most people aren't expecting it.
Yeah, exactly. So with the dollar or the DXY falling to a 7-month low, we've had the euro dollar recently hitting a 7-month high. Obviously, we're
Exactly. Yeah.
we're bouncing off these currencies at the moment. So with interest rates happening in Europe, we've got winter at the moment, which is less Russian oil and gas, which we spoke about recently. Are we looking at inflationary pressures on the euro side as well to be hampering possibly the euro as we get into the first quarter?
Yeah, that does seem to be the thing because there are. It was earlier today, I think it was that several. HSBC was one of them, and I'm pretty sure it's Morgan Stanley. I don't remember, but it was one of the other bigger banks. But HSBC was one of them that said that they don't expect the European Union to enter a recession this year. Previously, it had
Mhm.
been expected, which would presumably help bring down the inflation.
Yeah.
So there'd be more increased inflation pressure from that. But then on the other hand. There's the big problem of the difference between a core inflation and headline inflation because most of the really high inflation that we've been having in Europe is because of high energy prices. And so now there's been really good weather. The Germans have been able to restock the amount of
True.
natural gas that they had, so that's lowering some of the pressure there. And so that might mean that the headline inflation rate goes down, but then as we saw with Spain last month, the core rate actually continued to rise
Mhm.
as a lot of the measures that are being taken to deal with the gas situation are increasing costs in other areas of the economy.
Yeah.
So the core inflation increasing is a bigger problem. Well, for the economy in general, because
Mhm.
it's less volatile. It's supposed to be less volatile, and then that also is what what the ECB tracks. And so, if that keeps going up, then the ECB is necessarily going to have to keep raising rates, even if they really don't want to. And it seems like the ECB doesn't want to raise rates even less than the Fed
Yes.
does. But what pretty soon they're going to end up, well, it could be in a case where Europe has double the inflation rate than the United States does. And if their interest rate is not even, well, it's about half, it's less than half than the United States does. So they have a long ways to keep raising rates if they want to start really pulling down the core inflation rate.
Yeah, I was just going to ask as I go on to the chart for the euro dollar. I mean, is it just a case of the fact that it's a strong euro at the moment or a weak dollar? Because we've, since we had this parity break at one, I'll just roughly put it in on the chart here. Since we had this break of one at the back end, back end of Q4, well, in the middle of Q4, sorry.
Mhm.
It hasn't had any sign that it's going to test that particular zone again. But the euro has against the dollar has actually, catapulted pretty much. So is it just a case of the dollar in a bit of a turmoil move at the moment, while the rest of the basket of currencies such as the yen, the euro, and the pound have just been gaining, having advances because it's just a weak dollar at the moment?
Well, yeah, it's a good way to put it because whenever you're talking about a currency, it's always compared to something else. It's how much is
Yeah.
the currency worth to something. So you also have to consider what the other side is. And
Hmm.
in the case, you also because one, you have the euros getting stronger because everyone's expecting the ECB to keep, well, not everyone.
Most
There's some
people.
quite, but there's a large number of people. The people with money, which is really
Yeah.
what matters. Yeah, so they're kind of expecting the euro to keep the interest rates to keep going up, and then of course you had what happened, that really surprise move with the yen, where
Hmm.
the BOJ came out and said that they're going to be increasing yield curve control,
Yeah.
and so that also is pushed on the basket, and by extension also helps the euro and the cross. So it's all really mixed.
Mm. Yeah, exactly. I was just going to just highlight that because, we've had since the majority of 2022, we've had this vast downturn, but now we're seeing a slight recovery on the euro dollar. Obviously, it has a long way to go to get back those losses that it's had, but it is going in the right direction, I would say. We're just looking now possibly at the next handle or the next hurdle for the euro dollar, which would be the last major highs, the last swing highs, roughly about just under the 108 handle. So I
Oh
guess it's
wow.
just a case of seeing when the next move for the ECB will be, and then just depends if they have the traders have a little bit more optimism in the euro than the dollar, most probably.
Yeah, it'll be quite interesting to see how the hikes split there with the ECB and the Fed, because if I remember correctly, the ECB is going to meet one day after the Fed once again.
Mm,
And so
yeah.
then, if you get the Fed raised by 50 and the ECB raised by 25, or the Fed raises by 25 and the ECB raised by 50, there could be some significant play there for because there isn't really a strong consensus at this moment, I don't think, about what the ECB is going to do at the next meeting.
Hmm.
There's a stronger one for the Fed, but that might diminish if we go into the Fed and the ECB with half and half, 50%
Exactly.
betting, then you could have some pretty strong volatility there at the end of the month.
Yeah, that's true. Okay, so moving on to well, I would say the neighbours of Europe now, since Brexit has actually taken place. Would you say that Brexit is now a thing of the past? The UK has to worry about other things such as inflationary pressures. What the Bank of England will do next as well, and obviously we've had these really crippling strikes across the UK in the winter time as well. I mean, is this adding to a little bit more of a bleak quarter one for the UK in particular?
Yeah, it also could be a little bit of foreshadowing for what's going to happen in Europe, because um, the continental Europe is going through a very similar situation as Britain did and
Hmm.
is doing, and so there have been some strikes, but not as
Yeah.
much as you had in the UK. So
Hmm.
if the inflation, well, also inflation in Europe, if I remember correctly, started going up after it did in the UK. So that means it'd be interesting to look to see if, because I don't remember it offhand, what the difference is there in time lag between the inflation rates, and that could have an indication of what the time lag will be for the starting to have more strikes in Europe.
Hmm.
So, but the other thing is, um, the current prime minister is kind of the guy who created the high interest, I mean, so the high inflation in the first place, because he didn't want to, because he was trying to help the economy, because
Yeah.
you had the massive expansion in spending, and then you started having increasing inflation during the early part of the year, and so he came out with the series of packages that were like that increased the amount of disposable income that Britain's had, which helps people pay the bills and everything
Hmm.
fine, but on the other hand, it also contributes to higher inflation, and so now they want their salaries to go up, which is kind of like the natural thing that you would expect to have happened previously. So if they go through, the people need more money because things cost more, but if you raise salaries, then the things are going to cost more again, and so finding a way to fix that is kind of a complication, and I don't know if they're necessarily going to be able to pull that off. It depends on if they, because the problem is there's really, Britain is in a kind of really difficult position because they have really high debt,
Yeah,
and they have high inflation. And so the way that you deal with high debt is you generally inflate it away. But if you have high inflation, you can't do that. So if you
exactly.
have high inflation, you can increase debt. But so I don't
It's a
really know.
vicious circle at the moment, isn't
Yeah,
it? Because yeah, I think the UK inflation is still very elevated, even though it has come down slightly. But it did
yeah,
get double-digit figures for the first time ever at the back end of last year. So it does have a long way to go. And just touching on the what we're looking at the moment, I'll just show the recent trajectory of cable. Like you know. Like the euro dollar, it has actually been elevated against the dollar cable, but since these strikes and other inflationary worries have happened, we've seen this decline on cable as well. So it's not really been as progressive as the euro dollar, where euro dollar has just kept on pushing higher and higher. Cable is taking a little bit of a back seat now because it is actually being a little bit crippled by these, you know, the UK Prime Minister trying to his best to bring debt down, but also bring inflation down at the same time, like you said,
yeah. It's
and
still a little bit
these
complicated. Yeah,
exactly, and these inflationary worries as well. So we're looking at cable in the next quarter to probably even start progressively dive further down, depending on these crippling strikes, because you have the railways, the nurses, the ambulance staff, the doctors, they're all doing consecutive strikes at the same time. So
yeah.
it's really hampering this kind of like GDP growth for the UK, and obviously this falls on the back of retail sales and unemployment, and it goes back to back with everything else. So we are expecting a little bit of a downturn on cable in the next few months. Would you
Yeah,
say the
that's the
pounds?
other thing about inflation is that one of the ways to get rid of inflation is to increase productivity. But if everyone's going on strike, then you have less
Exactly.
productivity, which makes it just keeps. The other thing is also around there is when you start getting that split in the votes with the BOE. They had
Hmm.
three-way split and four-way split, and this is because there's really two camps that are forming in the BOE about whether how to deal with it because it's such a complicated problem. So some are saying, well, we just forget about inflation, deal with the debt problem, and the other ones are saying, well, we just deal with we'll get the economy growing. Oh, sorry, dealing with the debt problem is getting the economy going. Sorry, and so and the other ones are sort of like, well, no, we have to really get inflation down, and then we can deal with the economy. And so those two, so far, it seems. I mean, if the first camp, the ones that are saying, well, let's forget about inflation, we just got to save the economy, then the BOE wouldn't raise as much, and then you could see the pound continue to weaken.
Yeah, that's
So
true.
paying attention to the split in the vote is probably going to be the big thing to do with the pound over the next 3 months, or maybe
Yeah.
even for the rest of the year. But I'll just keep it to the
Possibly.
next 3 months.
We'll keep it to the yeah. We'll see what happens in the next quarter report if if it's
Yeah.
gone down so much. So just moving over to another currency, big currency in the European market is the Swiss franc, and that's had quite a bit of a roller coaster ride in the last 3 months. We've had. You mentioned recession at the beginning of the report, and we look at the Swiss franc and gold and other assets as safe havens as well. We've mentioned obviously before the Swiss as being a safe haven for quite a lot of traders. Do you still see it as a fully fledged risk asset that people can flock to during times of uncertainty?
Yeah, I mean, that's how it's billed, but then of course that
Yeah.
pushes up the price of the Swissy, and then
Hmm.
the SMB comes in and tries to push it down because that hurts their economy. So
Yeah.
it's better than the alternatives, but this seems to be kind of like the problem that we have with all the currencies, that they have so many problems that you just
Hmm.
kind of pick the least worst, which is
Yeah.
also one of the reasons kind of like why the dollar still remains strong. It's like yeah, because everyone could point to all the problems that the dollar has, but yeah, but all the other ones have those problems and worse. So yeah,
Yeah.
that seems in the sense that the Swissy doesn't have most of the problems that the other countries have, but because everyone else's currency is going down, then
Hmm.
that necessitates for the SMB to really step in and to hurt, which is usually what a central bank shouldn't be doing, is hurting their own currency, but just in order to not really ruin their economy.
This is the thing, they have to tread carefully because
Yeah.
it is very difficult at the moment with recessions overhanging high inflation. It
Hmm.
doesn't seem like it's going to have any big progression anytime soon. But what I've been checking out on the daily chart is since the last time we had these levels going down towards the 90 cent mark was back in almost a year ago now. So it's just a case of, a big collapse since the beginning of November on the dollar Swiss pair. This gives indication that obviously, the dollar is weakening pretty significantly across the board. But saying that, will we see possibly another upburst in the dollar Swiss franc anytime soon? Because as you can see, it's had a roller coaster ride for most of 2022, like a lot of the currencies have. But here we got a confirmation break from the last swing low. This was roughly at the middle of November, but since then we've been in a descending channel on this particular instrument. So a lot of traders have been asking me, when will we see some support on an upturn? But I don't know if we'll see it anytime soon because, like you said, the dollar has been quite weak in the last
Yeah.
few months as well.
Yeah, and also once it starts getting down below to the levels that it was previously, you could still get the S&P to step in. Before they've been kind of happy for the last year or so with
Yeah,
everything that's going on, but now things are kind of like returning back to normal. The war in Ukraine is sort of becoming background. It's been going on for a year. Everyone kind of sort of sees where things are. You don't, and so then it's going to kind of, and then all you have all the concern about a recession. So now it seems to be everyone starting to talk about a recession not being in the first half of the year, being the second half of the year. They're pushing forward their
exactly.
projections, so that might help a little bit for a short period of time. But
Hmm.
yeah, I would kind of agree with you there, and it's hard to expect a rebound.
Yeah, and of course, once we get into the second quarter, there'll probably be a recession in the third quarter, and then the third quarter there'll be a
Yeah.
recession in the fourth quarter, and then we'll see what happens in 2024 as well, most probably. So just moving over to the Asian market now, Daniel. Dollar
Mhm.
yen, we've just touched on it a couple of times since we started the report. We've got the government coming to an end on their term. Who's going to sort of over replace them, sorry, not overtake them, replace them, that's probably the best
Yeah.
word. And obviously, we're looking at policies easing as we get into the second quarter as well. What do you see as a likelihood for the outlook for the yen?
Well, yeah, that's kind of it's still open a little bit open debate. All these things are. I keep repeating the phrase. Sorry,
No, it's,
but
it's fine.
the thing is, there's going to be a change in the current governor of the BOJ,
Hmm.
Kurula.
Yeah.
He's seen as extremely dovish.
Hmm.
For in the entirety that he's been in there, the interest rates have been negative, and he hasn't really done much change in policies, and so his term ends in April. So then
Hmm.
someone else is going to be coming in. So everyone kind of expects him to just sort of keep everything as is until the next guy comes along, and then maybe potentially any changes would be to get things organized for for them if there's going to be a main policy change. But so far there isn't clear who exactly is going to be the replacement.
Yeah.
Usually, within 2 or 3 months beforehand, so that there isn't a big jarring change. And
Yeah.
but so far, almost all the candidates are talking about the this the current situation isn't really tenable. They need to change it, and so the first thing that they did was they change it was to widen the year yield curve control (YCC),
Mm.
and then that would be sort of like the first step towards getting rid of it, which could also lead to the yen getting even stronger. And
Mhm.
then the next step would be potentially raising rates, probably still staying negative, but then that would be the first time they raise rates in decades. And so they,
In quite a while, yeah, I was gonna say
yeah,
they're very slow off the mark if that's the case,
yeah, they haven't had all that much of inflationary problems, but now they're
Yeah,
kind of getting inflation, but for the wrong reasons. And so that this way, so it kind of like Cruda's justification for not raising rates is sort of like, I want inflation. I've been trying to get inflation for the last, was it 8 years, and haven't got it.
yeah,
Now that I have it, it's the wrong kind of inflation.
exactly. So just quickly looking at the dollar yen chart, as I said, like most of the other charts we looked at so far, the progression of the dollar over the last 12 months has been quite astounding. But, with every progression and every big swing high, we always get this turnaround. And how long is it going to be there for? Well, I've been tracking the dollar yen for quite a while since we had this peak just at the end of October. And, it's just been a collapse again, a bit like the dollar Swiss as well. And it's just a case of when we're going to see a little bit of a movement to the upside. At the moment, we're just tracking the recent peaks, sorry, the low troughs that we're seeing previously. We saw a little bit, I'll just zoom in, we saw a little bit of support at this particular level, roughly about the 130, the mid 130 level, because this gave us good indication that if we do break, there's going to be more of a progression to the downside to the next level. However, as you can see, we did get a good solid bounce and prices did actually have a few days of moving higher. So it could be a case of we found a little bit of support now for a lot of our technical traders and we could be possibly moving higher, but we'll just have to break out of this depreciated channel at the moment to see if we can, if there's going to be any, chance of hitting the 140 once again, which will be for the first time in a few months. So lots of questions for the BOJ, would you say, as we go
Yeah.
into the first quarter?
Also depends on whether, I mean, because the yen is kind of a safe haven asset. Also depends on whether
Yeah,
people start getting a little bit more willing to spend money and they stop worrying about recession.
yeah.
That thing where they're pushing recession, the expectation of recession forward, that could also help with a little bit of a bounce there if you're
Mm.
to add a little bit of fundamental to the technical.
Exactly. It's always good to go like with like. That's definitely right. Right.
Yeah.
So we're just going to go on to the Dow now. Go shoot over to the American markets now, Daniel. So the Dow's had a little bit of again a topsy turvy ride in 2022, and well, for the back end, I would say the first couple of quarters. We'll look on the charts shortly. But with that being said, is the Fed having much of an impact on indices and stocks? Would you say the traders kind of bouncing off the Fed and indices at the moment?
Yeah, it seems to be pretty much the Fed is doing a lot of the driving. Well, yeah, it depends on the Fed is having a bigger impact for more on the tech stocks than on the value stocks, and so
Mm,
there's but by extension they're also having an impact on the value stocks because the higher interest rates make it less appealing to be buying into something that has a high valuation. So that means you're going to invest in something else, which is why one of the blue chips, and this is one of the reasons why you've had
yeah.
the Dow really outperform over the last month-ish or something like that, or 2 months at
Hmm.
this point, I think it is. And the Nasdaq has been kind of pretty flat because there's that debate about whether the Fed is going to be raising rates or not. And then so one of the ways to kind of avoid that is to just get into a value stock and then wait it out. And so
Yeah.
that's why you had and also there's been some good quarterly reports so far. That was from the last quarter, and now we're heading into the new quarterly reports to see if
Yes.
there's been some in what kind of expectations we had. So at the end of the quarter, we had some kind of contradicting details. Some companies were saying, "Hey, next quarter is going to be great." Others saying,
Mm,
"Hey, next quarter is going to be really difficult," and they were all some in the same sector. So it's a little bit hard to say. Give the Going by CEO comments, a little bit hard to say exactly. They're not all agreeing on which direction the market's going to go. So
yeah.
staying in something, the more blue chips, sticking closer to the Dow seems to be a better play for a lot of people for at the moment.
Yeah, that's true. And just sticking with that theme, we've had this V-shaped recovery on the Dow for most of the back end of, sorry, the second half of 2022. And you can see
Yeah.
literally it's pretty much done this. It's got some nice firm support roughly in the beginning of October. We've actually pretty much 100% got back to this previous level. But now, obviously, as you can see, heavy resistance at this particular point, roughly about the 34,003 to 400 area. And as you can see, there's been a bit of a sell off. So this gives me the impression that there's a little bit of hesitancy on,
Yeah,
the
get a
stock
double
market.
top there. Yeah.
Exactly, yeah. So once this kind of V-shaped recovery, when we got to this particular area here, it was kind of an easy buy into the market because there was this presumption that the markets will get this V-shaped recovery 100%. But since then, the next little sort of hesitancy was if we're going to stay above and confirm this break. And as you can see here, this particular green candle had a very a harsh false break on it, which meant that prices did actually start collapsing lower. So these two moves were a little bit easy to see, let's say, is probably the best way I
Yeah.
could probably put it. But I'll just remove them so it's a little bit easier to see as well. It was a little bit easier to predict, but then we're now seeing what the effects are for the next month or so for the index. If we're going to climb higher back to this particular peak, or if we're going to have a little bit of resistance once again and a move lower. So it'll be interesting to see, especially with the Dow, because we have a lot of our traders find the Dow very popular to trade on, and as I said, is quite a big market mover as well.
Yeah, there seems to be quite a bit of opportunities there with the Dow,
Yeah.
because also that seems to coincide that if it goes at the current trajectory, it seems to
Hmm.
coincide more or less at the end of the month when we have the Fed. So
Yeah.
the Fed could be there helping whether to see what's going to push it above or help it turn down again.
Exactly, exactly. So the next major asset we're going to look at is one of our favorites and our traders' favorites is gold. We've had
Ah,
such
yeah.
yes, we've had such a good opportunities with gold, in the last 12 months as well. Not only the last quarter, but it has actually been traded on quite heavily. We've got the safe haven assets. Obviously, the conflict with Russia and Ukraine saw it peak quite significantly once again. We'll look on the chart shortly, but where do you think, with China reopening their gates, with the Fed really pulling back on their monetary policy, and obviously with the Ukraine-Russia conflict, where do you see gold heading to for the next couple of months?
Yeah, there's quite a lot of things going on that could
Quite a lot
really
of
help
things,
gold.
yeah.
Yeah, exactly.
I'm not helping you out here, am I? Really?
No,
Just
you're
throwing
actually really
everything at
good
you.
at summarizing it. So then I just have to remember that to touch on on the points. This is good. um, the thing with gold is there's still the uncertainty what's going to actually happen with China. I
Mhm.
think we kind of talked about this at during the NFP, where
Yeah.
if the reopening is happening, but the reopening could happen fast enough with the increasing number of cases, so you get that sort of downturn and then the rebound later, because
Mhm.
China is of course the largest retail consumer of gold, and that's where they want, and they're trying to put as a safe haven of their own for their own
Yeah.
money. And then of course with the problem that they're having with the housing industry means that there probably could be more interest in putting into gold instead of putting it into a building that might not actually end up being constructed. So
Mhm.
there could be from China in and the reopening, but that could probably be a little bit later, maybe not in the first quarter, because the first quarter corresponds with winter, and that's when you have the highest potential for transmission. You also have the Chinese New Year,
Mhm.
where everyone travels, and so you could end up with another large wave of cases because there's no longer restrictions about people traveling internally,
Mhm.
and so they could then move it around. So it could be a little bit complicated for China for the next 3 months, which could then end up meaning that one of the elements that could be pushing gold higher will be taken out. And then also the winter for the other risk event is the war in Ukraine,
Mhm.
and
Yeah.
winter is kind of more of a standstill because it's a lot harder to engage in combat when you're freezing.
Yeah.
So
Unfortunately.
they have the experience of fighting in the winter, and sort of the idea is that when in winter the ground freezes and you can start moving the tanks, but as we saw last year that didn't really happen, and also we had some really good weather come for the last couple of months, so it might, so the ground hasn't frozen,
Mhm.
so you had really not much going on on the Ukraine front in the moment. And then it depends on of course how the weather comes, because there right now there's been this cyclone that's been off the between Iceland and the UK, which has been
Mhm.
keeping warm weather for Europe. But then eventually that cyclone could disappear, and then you'll get you could potentially have a wave of cold weather similar to what happened in the United States. When was it? About mid-December, they had a
Oh
significant
yes.
storm, yeah, that everyone was
Yeah.
talking about. So
Mhm.
the cyclone right now is keeping that from happening in Europe, but it could suddenly disappear, and then you have that, and then that
Mhm.
could change the risk profile, and then so you could always. The thing about gold is it depends. You could always get this sudden bump up,
You
but a
can, yeah.
bump down under the current circumstances, at least for the next 3 months, it probably
Yeah.
doesn't seem to be. Well, there's always a risk that could happen. The Fed
Mhm.
could always go do something unexpectedly. Could go and raise rates by 75 basis points, and then everyone's going to jump into to the dollar, and then the price of gold will be weird. But
Yeah.
that's very unlikely.
Well, that's the thing with gold. Any big news event that could happen randomly, and you just get a spike on gold or a decline
Yeah.
in gold. It could happen. For anything. Um, it's just a case of being on the edge of the seat of the market. But obviously, if you're sleeping or if you're not getting alerts all the time, you could
Yeah.
miss out these big moves of gold. But with the three main things that we just spoke about, as we go into the 2023, since we got this triple bottom, I'll just quickly show you on the chart. Since we got this triple bottom at the back end of last year, $200-300 move on gold, and it doesn't seem to be slowing down anytime soon. I've been going, peak after peak at the moment. We've been really moving past the recent milestones that we've seen on gold. Now we're just seeing if gold will start possibly getting back above the 1900 handle. A lot of economists that I speak to on a daily basis have said 1900. It's trading roughly about 1870, 1875 in the last few days, but 1900 is such a big psychological handle that if we do get there and break it, then there is no stopping gold in the near term, you would think.
Yeah, I mean, there does seem to be potential for like a bit of a correction because we don't have any recent bottoms except for the triple bottom.
This is the other thing as well, yeah, with every big sharp move in the market, we do expect some kind of correction, but if it's not too heavy and not too detrimental, then we could possibly see another move to the upside, possibly.
Yeah, I mean, there's always the thing that the dollar is expected to continue to be weaker.
Yeah.
Especially if the Fed does a 25 basis point at the next meeting, then yeah,
Mhm.
there's quite a lot of fundamental pressure there to support the technical pushing it higher.
Yeah, exactly, exactly. So lots to think about with gold, especially going into 2023. And now we'll just move on to something we touched upon, well, with the winter month and cyclone and stuff like that, is oil and gas
Oh
going
yeah.
into going into 2023. So oil has taken a little bit of a downturn in the last few months. I mean, do you see with less Russian oil and gas in the world in 2023, inflationary pressures, China as well,
Mhm.
being such a consumer of this, and are we seeing any big moves in the market for oil as we go into the new year?
Well, yeah, there seemed to be like a lot of expectation from China because when they would reopen, there'd be increased demand for fuel from China, but it
Exactly.
hasn't
Mm,
actually seemed to it's because it seems to be that the process wasn't formalized. So like,
mm,
what was it in November they started talking about we're gonna keep the zero COVID policy, but we're not going to be enforcing it as strongly. And so people are saying, is they actually opening? Are they not opening? So it's been
yeah.
this slow, unofficial trajectory. And so it would have been different if the Chinese government came out and said, hey, we're reopening now, or we're going to reopen such and such date. Then you might have had a bigger jump in oil. But since then, people have been a lot more cautious. And
Yeah.
also, we've seen that Europe has been able to stop importing a significant amount of oil from Russia
Hmm.
and so there's this huge discount between the price that from Brent to Russian oil, so that it doesn't seem to be like a lack of demand
Hmm.
because if there was increased demand for oil, then they would presumably be buying. Well, unless they're from Europe, but Europe can you get oil is kind of fungible because you can put it into, Saudi Arabia might not be joining they're not joining the price cap to Europe, so they could be sent instead of selling to say China, they could sell it to Europe, and then China buys it from Russia, and so you get the move
Yeah.
around a little bit. So if there was a significant pressure in the market, there would be an incentive to do that kind of moving the oil around a little bit, and there would be presumably a higher price for euros, but it
Hmm.
doesn't seem to be happening. So that kind of sort of points to there not being as much demand for oil as everyone really expected. And of course, the other thing is during the last summer, you had this huge spike in prices, mostly because, well, natural gas and oil are kind of can be replaced for oil generation, so that's why the prices
Hmm.
kind of move in conjunction. But the Germans were buying up as much natural gas as they could anywhere at any price, and so that pushed the price up. But now the Germans have enough natural gas and in storage, and so now there isn't as increased demand. So everyone was sort of like expecting the price of oil to go up in the winter, but in anticipation of that, they already bought their oil, so now there's less. now everyone has it. So you
Mm.
get sort of like the paradoxical move lower, which could be the situation. Then of course you have the largest consumer is the United States, and if they go into a recession, people aren't sure whether that's going to happen first quarter, second quarter, third.
Yeah.
Then that could also significantly reduce the demand for oil. So yeah, it's a little bit these
It's a little bit
several moving
tricky,
parts.
isn't it?
Yeah,
Because yeah, even I thought at the back, well, in the middle of 2022, I thought there'd be quite a big demand for oil, and we did expect possibly to touch the prices of at least $100 a barrel
yeah,
at the back end of last year. But it seems like you said there has been a bit of a sell-off, and this expectancy that we will see oil start pushing higher has pretty fallen flat quite largely, hasn't it? And
yeah.
now we're
Well, the other
seeing
thing is
the
that China
repercussions as
wasn't
well.
reopened. Sorry, yeah, I
Yeah.
interrupted you there.
No, sorry, go ahead.
Well, it was the China thing because China had their economy closed due to COVID.
Mhm,
Then they had less demand for oil because also, if we have to remember, in the summer they had drought conditions and they had a few blackouts
mhm.
because there wasn't enough hydropower. So one of the ways to solve that problem is to use diesel or gas generation, which means that they would presumably need more. But if they keep the economy shut down to deal with COVID, then they don't need as much oil and they can stock up on it. And so now it seems like they're all fully stocked up, and so now they don't need to be buying as much.
Exactly. So it's pretty much a double-edged sword, because a lot of investors, as I said, did go in the way where they were expecting oil to spike. But like you just explained, a lot of countries are just dealing with the fact that, we've got our stockpile now. We don't really need to rely on Russian gas or oil to really keep us going throughout the winter. And then before you know it, it's going to be the summertime where demand kind of dries up anyway. So,
Yeah,
well, for gas especially. So, yeah, we're just seeing now. Just a quick look on what is expected. With China reopening, this kind of small ascent to the upside here could keep progressing. But I mean, you have to look at the psychological handles such as $90 and then $100 if we're going to hit, reach those peaks, and if we're going to get any more sell off on this black gold as well. So it'd be interesting to see as we get into the new year what oil is going to do, as well as other key assets as well. So
yeah.
thanks for that, Daniel. So we're just going to move on to our final stage of the quarter report, and that's the stocks that we've
Oh, nice.
selected,
My favorite.
and possibly the the biggest the biggest movers, or the potential movers for the next 12 months or 3 months at least. We're just going to start off on Tesla first of all, because Tesla have had a bit of a few months to forget after collapsing quite significantly. And it has actually, do we have this problem with Elon Musk and his outspoken behavior? That the
Yeah.
acquisition of Twitter, that's not gone down very well. Obviously, his redundancies that he's been making via email as well. Do you see a recovery in Tesla anytime soon?
Yeah, well, Musk came out kind of explaining the drop in Tesla on the basis of that it's going along with the tech stocks because the tech stocks have been impacted, but not as much as Tesla. So Tesla has been underperforming, so for example, the Nasdaq, and so
Mm,
that might be sort of has to do more with perception because the one of the problems that Tesla has is that it has such a high valuation, and
yeah.
particularly at the beginning of the year, the valuation was so out of it was so disconnected from other automakers, and
Yeah.
so a lot of that depends on goodwill. It depends on whether people actually really like the company, and so people, and because of the association there with the other thing with Twitter, it could end
Mhm.
up being pulling down the price. But then also means that there could be a good buying opportunity because if Elon Musk goes and buys Twitter and he pays attention to that, he might not be paying as much
Mm.
attention to Tesla, but it's a car company really functions on its own. The CEO is important, but it's not like they could the cars are still the same cars as they've always been, and it's still the
Mm.
same technology.
Yeah.
So the perception might change, and then he might eventually do something, either go out of the news. He might figure, hey, my stock prices are going down too much, I'm going to stop doing as much
Mhm.
Twitter stuff. He did promise to step down as CEO of Twitter, but then of course he also promised to stop selling shares and then sold shares. So there's that.
Yeah.
It's a little, there's always little bits of complications, but the thing about Tesla now is that it's come down to, I think its latest PE is around 30, which is
Hmm.
one of the lowest it's been in quite a while. And so um, the fundament, if someone was investing in Tesla, say at the beginning of the year, because for reasons that they expected the car company to really go, and there's a strong push to be going towards electric vehicles, even
Hmm.
though Tesla used to be the largest company, it's been overtaken by the Chinese BYD.
Hmm.
Um, the that situation really has actually improved. They've built more factories. The big problem that Tesla has always had is that they didn't have enough production to meet demand. People who
Yeah.
had to wait up to 2 years in some cases
Hmm.
to get a Tesla. So now there's also expectation that they might open up a new plant in Mexico, so that
Hmm.
before at the beginning at the end of the year before, at the end of 2022, 2021, they had
Hmm.
2 factories functioning. Now they have 4,
Mm.
doubled, and with another one potentially on the way. So then, if you think that the car is a good car, there's good reason to expect the price to rebound. It might keep going down a little bit because of the
Hmm.
particular turmoils, and the Fed, the just because the say the effect of tech stocks is it's not completely disconnected from tech stocks. It's doing worse than other tech stocks, but that
Yeah.
doesn't mean it's not subject to the same problems that tech stocks are. So you could, if the Fed were to stop raising rates as much, or if there's some reason that they might lower rates, you might get a rebound in Tesla for
Yeah. I mean,
more you know
I was going to say that
financial reasons. Yeah.
we've seen rebounds before in Tesla, haven't we? I mean, especially with
Yeah.
earnings seasons. Okay, stock splits have affected the price, but then again, like for investors wanting to invest for primarily in Tesla, it's cheaper to buy this stock now. So in a way, we're going back to the height of the pandemic in the middle of 2020, which we last saw these levels. But Elon Musk doesn't really seem to care or take notice of this. And I got asked a question a few days ago: should investors be worried about this collapse on the stock? But like we just said, we've seen it before. But so, would you say there is a worrying time for Tesla, or is it just basically a motion that they'll go through and then they'll be probably back up to $200-300 a share in no time?
Yeah, it's a kind of fickle, because a lot of it has to do with expectations more than the actual fundamentals of the of financials. But as the price has been going down, the people who really like Teslas,
Hmm.
they've kept buying. Kathy Wood has been, as it's been going down, she's been buying more.
Yeah.
So it doesn't seem like any of the people who are really supporting Tesla to go up in the first place are abandoning it.
Yeah.
There might be a short period of turmoil, is I guess is a good word to use there.
Yeah.
But then how long that's going to last is, it go down a little bit further, or
Hmm.
it might be rebounding now. So there might be that once you probably have to get through that, and then then it might return to growth, because um, the 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 fundamentals of the car company haven't changed regardless of what Elon Musk does on Twitter. Essentially,
Hmm.
is the really bottom line. But of course, Tesla is always, there's been a lot of people saying that it's been overvalued. Oh, the price is going to. I remember people way back in 2020 saying that the price is overvalued and the stock is going to crash.
Mm.
And that was back when it was what, 20, and now now
Yeah.
it's the 5 times that. So it might
Exactly.
still go down a little bit more, but it seems to constantly rebound and rebound.
Yeah.
That might not always happen. Past performance doesn't necessarily guarantee future results, but it does might give you some kind of clue.
Yeah, definitely. Well, speaking of stocks that had recently rebounding, Apple is another one we're just going to touch upon because it did have a bit of a few months to forget as well. It has actually reached yearly lows, but with supply chain issues, China reopening, inflation worries. I'll just put the chart on now so we can just go through it as well. Do you see Apple as being a little bit of something to worry about? In the last few sessions, the last couple of days, we've had a little bit of an upturn in the stock, but going back, this is going back to June of 2001. It has had a bit of a a few months to forget, would you say?
Yeah, it seems. Well, they had. I mean, in a little certain sense, Apple is a bit of the anti-Tesla in the sense that they're also decoupled. It's a tech stock, but it's somewhat decoupled from the other tech stocks, but it's been performing above
Mm,
the Nasdaq. So most of the problems that Apple's had are kind of external. Like they had the problem with supplies from China.
yeah,
That seems to be being resolved now that China has reopened. But then you have the other thing of inflation, where people aren't going to be spending as much on expensive things, and Apple products, things
yes,
tend to be more expensive than the comparable PCs. So
yes, they
that
do.
might be someplace where people might be saving money.
Hmm.
So this, but the other thing is inflation is been coming down in their largest market, which of course is the United States. So it maybe inflation is going to come under control, and if the United States avoids a recession, then Apple could be in a really good position. But then,
Yeah.
especially now that China has been reopening, but if
Hmm.
China reopens, and then there's a deeper recession than expected in the United States, then Apple could be in a little bit of trouble.
Yeah, so there is room for Apple shares to slide even further based on the news
Yeah,
that you just said.
unfortunately.
Yeah, yeah,
Yeah,
yeah,
also, of
definitely.
course, it's a tech stock ultimately. So, of course, if the
Hmm.
Fed goes in and hikes by 50 basis points at the end of the month, then you could get a little bit of an extra downturn.
Yeah, exactly. So moving on to our next stock, which is JP Morgan. We're seeing at the moment that it's pretty much brushing off any worries about recessions or high inflationary impacts. The bank has, you know, profit profitability wise, it's done quite well. Obviously, we're waiting for the earnings season to come out, but in the near term, as a stock on the market, it's looking pretty healthy. Would you say?
Yeah, that's one of the things. The CEO of JP Morgan is, of course, Jamie Dimon, who's been going on and on about the coming recession. So, presumably, if there is a recession, they'll be in the best position to deal with it because they've been taking a lot of provisions. And
Yeah.
the other thing about, I mean, the neat thing about provisions for a bank is that if the recession doesn't happen, they have all that money saved up. Now they can then pay higher dividends, which should be also good for the shareholders. So these good reasons. This is one of the reasons why J.P. Morgan probably has been outperforming other banks. I think Bank of America has been doing a little bit better,
Hmm.
but what by one of the things that the banks have is that they're supposed to be a refuge from risk. And if the bank is taking risk seriously, like they're saying there's a recession coming and they're getting ready for it, then that gives you more confidence than probably another bank saying, nah, there's no recession, don't have to worry about it, which
Yeah,
seems to be some other banks in other areas, which,
yeah,
their stocks aren't doing so well.
exactly. Yeah. So, I mean, would you say that, going into the new year, banks will probably perform a little bit better than, other stocks in the market?
Yeah, definitely. As long as the Fed keeps, well, even other central banks, because the higher the interest rates, the better banks are,
Hmm.
better off banks are, because they're essentially their main source of income are interest rates, and so with the higher interest rates, they can charge a higher margin, and they have a higher spread. So the ones that are better off are the ones that have higher quality credit, generally speaking,
Yeah.
so that are better, that have a better policy of screening who they're giving out loans to. And it
Hmm.
seems to be that JP Morgan has been doing a better job of that, because
Yeah.
if we track the delinquency rates so far, they've been having non-performing loans increasing, but other banks have had their non-performing loans going up faster.
Exactly.
I think
Yeah.
that's Wells Fargo's had the bigger problem there. So
Hmm.
they seem to be in a good position. If you expect a recession, or you're trying to hedge from a recession, usually banks are generally a good thing to do, particularly if they have high provisions,
Hmm.
which in the case of which corresponds for the case of JP Morgan. So that's probably one of the reasons why it's been attractive, and also might continue to be attractive right up until we see whether there actually is going to be a recession, or the recession's been kicked forward by another 6 months to the end of the year or something like that.
True. Yeah. I mean, on a technical standpoint, we're just looking now, as you can see, we've had this like slight V-shape recovery on the stock, and we're hitting a little bit of resistance now. So we'll either probably start heading down, but if we do head down, we'll have to see if we break the previous support that we base, or it could be it's looking a little bit like a zigzag pattern at the moment. But we'll
Yeah.
see if we break it and start moving higher. The consensus is if they do break this particular 138, 139 level, then it will go a little bit higher. So it'll be interesting to see. At least it's on the upturn. But one stock that isn't on the upturn, unfortunately, is Cineworld, since
Oh, right.
it's had quite a bit of a detrimental year, unfortunately, since
Yeah.
this big gap in the market here, roughly in the middle of August, where it did declare that it would go into bankruptcy and start looking for a buyer. Since then, it's been a little bit subdued, because has anything concrete been given to Cineworld to say, we're going to be progressively profitable in the future, or we're going to have a bit of a break through the dark cloud?
No, so Cineworld is kind of like a really speculative stock, but so it's sort of like it's really high risk, but that's where you're gonna find your higher rewards thing.
Yes.
So there was a rumor that they would be selling their assets to AMC, but then AMC is a little bit short on cash as well.
Yeah.
So the main issue is if they can resolve their bankruptcy thing, then they might have a rebound. So it's something to pay attention to if you're interested in something more of a higher risk thing. But be
Hmm.
really the thing is, it's gone down so much that it's kind of reached the
Yeah.
bottom. It's already bankrupt, so going
Yes.
further down isn't all that much of a risk. But it is something that could just could totally collapse. And then of
Yeah.
course the movies in general are kind of fickle. You never know what's going to do well in the box office.
Hmm.
So that's another thing. So it's really risky, but there is a chance of it bouncing back if it either sells its assets or comes out of bankruptcy, and then it
Hmm.
starts trading, and then it could slowly regain. But
It could regain, yeah, but unfortunately, it's just like any other company during the pandemic that obviously had to close, had no
yeah,
choice but to close, and didn't really recoup enough gains in 2021, 2022, when the lockdowns were lifted, in order to keep surviving. And unfortunately, it was quite a big chain that went into bankruptcy. So, I mean,
yeah,
from a technical standpoint, unfortunately, there's not much to sink our teeth
yeah,
into. It's
yeah.
just a
That's
case of if we do, like you said, if it does fund a buy, if it can come out and start reopening again, you know, like you said, movies at the box office are always fickle. You get hits and misses, but the cinema will always be around, even though it's not so popular anymore, because a
yeah,
lot more people have obviously streaming services at home and things like that. But we can expect just a slight bounce on the price if we do get the good news for Cineworld. But it'll be, it's been going on for quite a while now, so a little bit subdued and a bit difficult to hope for in that
yeah.
respect. Yeah.
Usually, it's sort of like once they get through the distressed debt thing, then they can get rid of of the extra debt.
Mhm.
Then usually some companies that are in bankruptcy can recover, and that's why it's sort of kind of a speculative thing. But
Yeah,
that's what you're looking for in something like that.
exactly. So just moving on to our last stock now, that's Barrick. And we're looking now at quite a big upturn in the stock, because we are going into the first quarter with a bit of optimism, with the growing electric vehicle rollout as well. Where do you see this particular stock going? Because it's a little bit of how to say it can give you a lot of benefits, but not a lot of people are trading it so much at the moment, or have been in the past.
Yeah, it's one of the another kind of speculative thing. If you think that when there's going to be a significant increase in demand to copper because there isn't enough electric infrastructure to charge all the
Hmm.
EVs that everyone expects to be running around in the next 10 to 15 years.
Yeah.
So any of the miners that are producing copper are in a good position, but the Barrick also has the additional advantage that they also produce a lot of gold as one of
Yeah.
their main productions. So also, if you expect gold prices to go up, um, the, it also functions as a good proxy as well.
Hmm.
So it gets a little bit of if the price of copper goes up because of the increased demand and also from China reopening, they might start resume their construction projects, which also demand an increased amount of copper. So you
Hmm.
could if that happens, you're in good position. Or if the the copper thing doesn't really work out so well, you could get you could get some support from gold as well. So it's got two things that are going for it.
Got two very good things going for it. That's
Yeah.
for sure. So I mean, it's looking a little bit more optimistic than not as we go into the new year for Barrick. I mean, a company like this, a stock like this, so it's looking like, if it can keep slowly progressing, then obviously more and more traders will be attracted to it. Economists will wake up and start looking at it a little bit more. And like you said, it's got some good things going for it, and it can really start propelling quite significantly.
Yeah, of I would in general be happy with most of the copper producers, but Barrick has that additional thing of gold there that makes it a little bit more interesting for me too.
Mhm. Yeah, definitely. Okay, then, Daniel. So that brings us to the end pretty much of this quarter report. Thank you for joining me. Lots of interesting assets and instruments that we covered. Quite big ones as well, because we want to give our traders the best education and outlook for the next 3 months at least. Taking into account recessions, inflation. Earning seasons, so it's very, very important that we cover all our bases. So thank you very much for joining me.
Well, thanks for the invitation. Hope to see you soon.
No problem at all. And we'll speak again shortly for the next one. Until then, take care. And to all of our traders that are joining us, thank you very much and have a great trading quarter and good luck with everything.
Take care, everyone.
Bye for now.